Go to my site, philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to Phil's Gang. My name is Phil Grande, and for years I've been teaching folks just like you, the retail investor. And also this is the home of the Pro 2 color-coded chart that makes things so easy to buy because the color will tell you when to buy, which is green, and when to sell, which is red. And the whole idea of Wall Street, okay, is they make it complicated. They do that on purpose. Well, 25 years ago, I said, this is ridiculous. This, Wall Street really is only for professionals. Because if you take a person who's just a small retail investor, he only trades maybe a couple trades a month, maybe 2 trades, maybe a week, but the small retail investor, they make it too complicated for him. The charting system's even complicated. And so I've been doing this for 50 years, trading, and then 25 years ago, I said, I'm going to make it easier. And I'm going to teach people how to trade. I want to teach people who are the non-professional because they get screwed. And they don't need to follow earnings and all this stuff. They got to follow the money. If you're a small retail investor and you're trading twice a month, 3 times a month, or twice a week, and all you need to know is where's the money going? Is the money going to tech stocks? Is it going into Apple? Or is money going into J.P. Morgan, the bank, or Morgan Stanley? That's all you want to know. And 50 years ago, I created a chart, and since then, over 125,000 folks, just like you, the small, non-professional retail trader, had been using this chart, and it works. And here at Phil's Gang, we have one of the best educational programs. Nobody can touch our education program. It's 25 years of teaching excellence. 25 years we've been doing this. So that's who I am, that's who we are, and we'd like to, again, welcome you to my radio show and my podcast and talk to you not only about the market, but what's really going to happen in the future. Now, we have been hearing, of course, this week, let me play a cut. This is nothing new. You're probably tired of hearing this crap.
You, will you accept the jury's outcome, their verdict, no matter what it is?
Yes.
And have you...
Okay, so he lied. We know that, right? And then we had this going on.
Well, this is something that President Biden and this White House were adamant that he would not do. But this morning, with just weeks left in office, the president is now protecting his only living son with a sweeping pardon. The about face comes just weeks before President-elect Donald Trump is set to take office. Trump has vowed retribution against his political opponents and has repeatedly bashed Hunter and the Biden family, accusing them without evidence of corruption.
Without evidence, no evidence of corruption. What they get kickbacks of $30-40 million or more. No evidence. See, you can't trust Wall Street. You can't trust the news. So when you're taking your money and you're going to invest it in the stock market, you think the people on Wall Street are any different? They're going to tell you the truth? They never tell you the truth. They keep talking about the lie, how he lied, how Biden lied about pardoning his son. Of course he lied. He lied about it. But the more important lie that you should be focusing on is he's been telling us since January 2021 that the economy's been good. And the economy isn't good. The economy's a fraud. And it's been a fraud since 2009 under Obama and then under Biden. This whole stock market rally is a fraud, not earnings. Earnings didn't drive this rally. It was money supply, printing a bunch of money, $14 trillion from 2008 to today, to shove into the economy, to push the stock market up. Because remember, the stock market reflects the money supply that's pushed into the economy. So you push tremendous amount of money into the economy. And by the way, very inflationary, very dangerous. Because when you print and print and print 14 trillion to shove into the economy, you print that money. That's very inflationary. Then they have to start raising rates to get the inflation down. That's the problem. By the way, you know, most people don't realize right now, and I'm going to show you something interesting here. Take a look at this chart. This is when Trump won the election, November 5th. Look how the market took off. That's a big feel-good rally. Look at it. It just keeps going every day. We're at our 54 new all-time high because of this feel-good rally. But what people don't realize, and Wall Street's not going to tell you this, we have a massive amount of selling in this market. That's right. It's called a blow-off. Now, what's a blow-off? A blow-off is different than a correction. Like, for example, when you had a correction, let me just bring this chart up, like this right here. This is a typical correction, right? COVID, we had about a 30% correction. Here we had another correction. Right here, that was about 25% correction, right in here. Those are corrections. What we're in now is a blow-off, just like we had in December of 2021. In December of 2021, here, let me show you, we had a big blow-off. I'm going to tell you the difference between a blow-off and, there you go. I'm going to show you the difference between a blow-off and a correction. A blow-off is like December of 2021. They dumped the insiders. I'm talking about the institutions. I'm talking about the big corporations, the insiders, the CEOs. They were dumping $69 billion in shares. $69 billion. But the market doesn't go down in a blow-off. That's right, not right away. Remember, a correction, bam, it goes down. You lose 30, 40, 50% of your money, right? You've been, 2008, right? .com, housing con, bam, down, right? COVID, bam, down. Well, those are corrections. A blow-off, like in December of 2021, those are dangerous because what happens is they only occur when there's such excitement in the market and these tourist investors, as we call them, they jump in out of excitement, out of greed, out of fear they're going to miss out. And that's when the institutions and the insiders start dumping money to them. So what happens is they start dumping their shares, the big institutions, to the retail investor, doesn't know what he's doing, and the market keeps going up. Because as they dump their shares, more and more these greedy people are coming who know nothing about the market. They're so fearful they're going to miss out. Well, that's what happened, and it's very unusual. It doesn't happen often. You have to have a combination of where you got a stock market that's really overbought. Okay, the stock prices are nuts, valuations are nuts, but at the same time, there's a celebration, there's a feel good, just like what is happening right now. If you take what's going on, we're in the middle of another blow-off because everybody's so excited that Trump, right, he's going to fix everything. He's going to create miracles. He's going to walk on water. So you have, again, the insiders, the institutions, the insiders, they're saying to the retail investor who knows nothing, they always buy right at the peak. We can bet on that. They're always right at the peak. And they're saying, here, take my shares. Here, take my share. So the market doesn't collapse like it does with a correction. So we are now in another, now take a look at this chart, but look at the difference. In December 2022, they dumped $69 billion worth of shares. And who's buying all those shares? Retail, the retail investor. And look how, see this line right here? Look how much selling was going on. But look where we are now. Look at this line right here. Oh my God. You're talking, what, probably $129 billion. But you don't see the market going down because you got massive amount of these tourists coming in and buying. And that's why it's very unusual. It doesn't happen that often. But what we saw happen here, remember we had that big collapse, we're setting up for another collapse here. And you don't hear anybody talking about this, not anybody. So what we're hearing is about the lie that Biden said, hey, I'm not going to pardon my son, and he did. I don't care. That's not the lie I'm concerned about. The lie I'm concerned about is that, again, how great the economy has been. But the economy hasn't been great since 2009. From 2009 to where we are today, the economy's been fake. It's just fake. It's all propped up. Let me show you what I'm talking about. If you take for a minute, and let's go back to here. Let's go back to this was after the dot-com crash and the housing crash. This is 2009. Do you remember they came in with QE? They printed a tremendous amount of money. Matter of fact, from 2009 to where we are today, they printed $14 trillion to shove into the economy, to push the stock market up. The stock market didn't go up by earnings or profits. 5 stocks. Take for example, we all know that if you take the Magnificent 7 stocks, those stocks have been the only stocks driving this market. That's what's been driving the market. If you take this year here, 2024, and the market is probably at the end of 2024, let's say it's going to be up 18%. Do you know only about 4 stocks created this whole 18, 20%? 4. Not just out of the 500 stocks. If you really take a look at the stock market, yes, there's about 8,000 stocks, but let's drop it down to about 3,000 stocks that are traded daily. Do you know there's only really 5 stocks that have been driving that market? Earnings, when you think about it. What drives the market is money supply. So if you go back here, take a look at this. After the market crashed in 2008, what did they do? They did what they call QE. So they printed $3 trillion, and they took that $3 trillion and they went and they bought treasuries, and they to get the treasuries, the 10-year treasury yields to go down, okay? So to bring those rates down. And at the same time, remember, the Fed rates were down. So they wanted to get the long-term rates down. So they kept printing and printing all this money, buying treasuries, the Fed's buying treasuries to drop interest rates. And then what they do? QE1. They took $1 trillion, right? And they had the banks go in and buy their own shares. Buy their own shares. They told the banks, don't go and help the small the household, the homeowner who's in trouble. The homeowner's upside down. He owes more in his house than it's worth. They said, don't help him, and do not help the small businesses on Main Street who are upside down. I want you to go and buy your own shares to move your stock up, and then I want you to go out and I want you to buy commodities like gold and oil, and I also want you to go buy all these banks that are going broke, but don't buy the assets, just buy the deposits. So $3 trillion right here, QE1, QE2, the twist, and QE3. This was $3 trillion they shoved into buying all these treasuries, keep interest rates down, and to give the banks money, okay, so they could have money at 0 interest to buy their own shares. And these stocks went up, the bank stocks went up about 80%, something like 80% in a very short period of time. And it was just insane. Now, from that point, remember, on top of that, they started increasing the money supply. Here, let me show you what I'm talking about. they started to increase the money supply on top of all that. So they printed $3 trillion to get the banks off their back, right? Then they turned around and they started to increase the money supply. And this is what people don't understand. It's the money supply that has been that's been driving this whole market since 2008, or let's say the low off of 2009. Look at the amount of money they kept shoving into the economy. 14 trillion. Otherwise, this market wasn't going to go anywhere. And most people don't even understand this. So we get back, I'm going to talk more about the biggest lie. Never mind about their kid getting pardoned. The biggest lie is the economy sucks.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. Join my gang. Just go to philsgang.com. And we've been in education for 25 years. That's right, 25 years we've been teaching. And we make it simple. Because all you want to do is follow the money. Where's the money going? If you're going to buy Apple, is money going in or is money going out? That's all you need to know. Earnings, it doesn't matter. Because they put money into stocks when there isn't any earnings. That's right. So you want to know about money. Where is it going? Whatever stock you decide to invest in, what's it doing? Is that money going in or is it going out? And we set it up where it's a color-coded chart. Here, I'll show you what I'm talking about right here. And it works. Right here we go. All right, for some reason it's not popping up. Maybe get it there, Willie. I can't get it to pop up. Oh, here, I got it right here. Okay, I have it right here, gang. I finally got it. Yep. Okay. So this was built, engineered 25 years ago. You buy on green and you sell on red. And see the yellow right there? That will tell you when you have a change in money coming in. So in other words, all you want to know, no matter what stock you buy, this is the spiders. And it goes right on your phone, obviously. And it goes on any of your charts, laptops, whatever. But the beautiful thing is when you buy a stock, you want to know, I don't care about the earnings. I want to know, is money going in? Are the institutions buying? And when they buy, it turns green. But let's say they start pulling their money out. And you're being told, buy, 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 buy. No, you buy, buy. This will warn you. It will turn yellow and tell you, no, no, no. Money is coming out. And then it will turn red so you can sell it short. Remember, Wall Street doesn't want you to short stocks, and for a good reason, because when you short a stock, they don't make much money. That's right. When you short a stock, they don't make a lot of money. They make money when you cost average down. What does that mean? Well, just think of this here. How many times have you heard cost average down, right? So what happens is when a stock is being sold off by the big institutions, they're selling, right? And they keep telling you cost average down. So if you bought a stock at $53 and it drops to 43, then you buy more, it drops to 23, you buy more, it drops to 10, you buy more. They're telling you cost average. That's stupid. They should be in jail for telling you that. The reason why they tell you to cost average down because they make commissions because you're buying. They don't want you to short. So what we did 25 years ago, and here's how the market works. When they're finished shorting the big institutions and the insiders, and let's say they made $1 million, they don't make $1 million until they buy that stock back. So what happens is all this money that, remember, they're shorting, they're selling short, they got to buy it back. And so what happens is the money starts coming in what they call the sweet spot. That's the spot on your chart where you have the most money, massive amount of money. Remember, these were all sellers now turning buyers. You have a massive amount of money coming in a short period of time called the sweet spot. And that's where pros buy, right here, because it's the highest probability of not losing money because that's the point on the chart. See the sweet spot right here? See that? This is your stochastics right there between the white lines. And then it matches right here. So when they sell short, they have to turn around and buy. So you have a tremendous amount of buying coming in a short period of time called the sweet spot. There's our 15% gain. They don't want you to do that because they don't make money by you shorting. They make money shorting, but they don't want you shorting. They want you cost averaging down. It's the biggest scam on Wall Street. So this is a chart we designed 25 years ago. And again, we've been teaching for a long time, and we'll show you not only how to use this chart, we'll show you how to understand the market. You got to understand how the bond market works, okay? Because the bond market tells you what really the stock market's going to do. But going back to, I want to go back to what I started out on. You see this here? Now, if you remember, okay, we were talking about okay. All right, we're talking about after the market crashed in 2008, then it dropped to a low of 2009. They printed money and created Q13 twist with $3 trillion. See, 1 trillion, 650 billion, 400 billion, 1 trillion. And they did that to buy treasuries that dropped interest rates to zero, so then they could sell money to the banks at zero interest, and then they could take that money and they go out and they buy assets. They bought gold. They bought banks that were breaking down. And they bought their own shares, and that's what created the market going up about 80% in about, I forgot what it was, about 18 months, something like that. That's what got the whole rally going. Now take a look. I'm going to overlay this for you. Now remember these lines right here, right? I'm going to do a little overlay. That's from 2009 to 2012. Watch this. So from 2009 to 2012, I'm going to put these lines in for you right here. Okay, 2009, right here. Okay, right to 2012. Those are the same lines right there. That's where they printed $3 trillion for QE, and then the money supply was increased by $2 trillion. So you see what I'm getting at? This whole thing is a bubble. See, the way the stock market is supposed to go up is by, when you increase money supply, you want the CEOs of companies taking that money, and you want to take and increase productivity. That's right. You want production. You want to see, we're expanding, people and production, and that's how you create an economy. Because remember, what creates an economy is a strong labor market. And the way you get a strong labor market is by, again, buying new machinery called business investment, IT spending, and then all of a sudden your production starts going up. Instead of manufacturing 10 telephones in an hour, you're manufacturing 1,000 phones in an hour. And then what happens is, when you got production, wages start going up faster than inflation. That's not what they did here. Look here. From October 2012 to 2020, look at the money supply. They put in another $5 trillion, okay, because stocks weren't going up. So they took the $5 trillion, instead of putting the money into increased productivity, into business investment, they put it into stock buybacks. So they would take this $5 trillion, and they'd go to the banks. The Federal Reserve would print this money, take the $5 trillion, go to the 5-6 biggest banks, say, look, we're going to buy your treasuries, and we're going to buy your mortgages, and now you got $5 trillion in new money. But what we don't want you going out and lending it. What we want you to do is keep buying your own shares, stock buybacks. And then we want you to take the money and loan it to the publicly traded companies, not the guys on Main Street, not the people not the small mid-cap stocks, not the guys on Main Street, the small businesses, the backbone of our country. Don't loan them. Keep loaning to the publicly traded companies so they can buy their own stock back and push their prices up without increased productivity. So that's what they did between 2012 and 2020. Now look what happened. 2020, we had COVID. Remember in 2020, we had that big collapse, right? We had that 30% drop. That 30% drop. What'd they do there? Instead of increasing productivity, they increased money supply. So in other words, from 2009, between Obama and Biden administration, and then the Biden-Obama administration, all they keep doing is they keep pushing in all this money into the economy. Never mind, and remember, only a handful of companies have earnings. Okay, and it's mostly, of course, the Magnificent Seven stocks. They're the ones that have all the earnings. Most companies, all these companies are going up because, again, of money supply. Because that money supply, the more you keep on printing, and the more you take that money, and you keep pushing it to these companies, and they keep buying their own shares. I mean, it's amazing. So 2020, we had the big collapse right there. Remember that big collapse? And guess what happened? They printed $6 trillion more. So you get what's going on? The only reason this whole stock market's been going up since 2009 to where we are today is because of zero rates, low rates. Because remember, they kept these rates low for a long time, because when they print all this money, they keep buying treasuries to get interest rate, get the 10-year treasuries down. So people go buy houses, and people think, well, the economy's really doing good. I can buy a house at a mortgage of 3%, 4%, when it's all air. It's all BS. So if you take and look at let me show you one more chart. It would really show you what's going on. Right here. So if you take and look at this chart, So you go all the way back to 2009. Interest rates were at 0.0, just say 0. All the way up to 2020, we only went to 1.5%. Are you nuts? How'd that happen? By printing all this money and going in, and the Fed buys treasuries to drive interest rates down. Okay? Remember, you have the Fed, they drop their rates first. They drop their rates first. And then they turn around and they buy treasuries to drop the long-term rate down. Those are the rates that affect your mortgage, your car, and loans, and everything else, business loans. So look how long they kept these rates low. See, the market wasn't going up on earnings. Yes, all we kept hearing is great earnings, but that's a handful of earnings from tech. And then we had our collapse here, COVID, and look, interest rates, they dropped them again from 1.5 down to 0. And we had this big 100% rally up to December 2021. And this is where they had that big blow-off I was talking about at the beginning of the show. They sold $69 billion worth of shares to who? To retail investors. Don't know what the hell they're doing. And then interest rates went from 0, we'll say. Now interest rates started to go up to 3%. And who's in here buying from 3% up to, remember, we stayed at 5%. Rates stayed at 5% for about, I think it was about 4 or 5 months. Now it finally dropped under 5%. So you can see how they pushed this whole stock market up with all this low interest and all this money supply. This is one of the biggest bubbles in history, and the guys on Wall Street and the smart money made a fortune. But it's going to be over now. Soon it's going to be over because you can't keep doing this, because here finally what's going on, interest rates are going up. Do you remember in September when they dropped interest rates? Fed came in with a 0.5 point drop. When they did that 0.5 point drop, what happened to 10-year Treasury yield? Usually it will drop. Remember, when the Fed cuts their rates, their short-term rate down to 0, then the 10-year Treasury yield will come down, follows it. But not this time. This time the Treasury yield shot up because the bond market's warning everybody what I'm talking about. And remember, the stock market, when you look at the stock market, what is the stock market? The stock market is only a reflection of the money supply. People look at the stock market, look how great the stock market is. We're at we just hit our 54, this is our 54th all-time high. That's BS. This is all the stock market has been doing since 2009 for the past 16 years is reflecting the money supply. That's all, like having a mirror. So this is the biggest bubble in history. Now it's going to be hard to continue it, to keep printing more money supply, because why? Because interest rates are going up. And why is interest rates going up? Because of all the printing of money is so inflationary. So we've had a wonderful ride. Be prepared when the market does correct and goes down, and use my Pro 2 color-coded chart. It will turn red in advance and tell you when it's time to short the market. Check it out, philsgang.com, my Pro 2 color-coded
Phil's
chart.
Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to make